Now, some trading tips before we start today's daily brief. Now, yesterday was known as a trend day. And on a trend day, you have to look out for this particular structure that I was talking about yesterday. That's a head and shoulder pattern over major levels, right? And I mentioned that this should have plenty of such structure today. It's very common in choppy days. Now let's take a look at a 5-minute chart and see for yourself how many times it has appeared, right? Have you caught this? This is the first time, right? You have all the top wicks in the 5-minute chart to provide you with the shoulder resistance. So that's one. Here's another one. We have a doji right on top, and we have the shoulder resistance up and down from here. Now, although this one did not complete, but it's good enough to protect your trade and get involved, right? We have another one right here. Shoulder resistance right here. And this one reaped rewards. So just yesterday itself, this particular structure appeared many times. Even this, if you want to consider it, small ones here, using orange as a resistance. And that's the reason why I suggested this structure to look out for in the early morning. Suggested for that because this is very common for a trend day. Another thing about trend days you need to know is that buyers are not bullish on trend days. In this case, the people who are buying in the market are also bearish because they are taking profits from their shorts. They are covering their shorts. So if there's any buying involved, you have to be very careful, right? Buyers don't necessarily have to be bullish, covering shorts and taking profits. So you have to be absolutely careful with buying calls on a trend day. They are just buying up to cover shorts, take profits, and there will always be sellers ambushing. Now, I talked about every green candle being eaten up. Sellers are just waiting for buyers to come in and ambush them. And there is a trick, actually, that's something you can learn, because there are trend traders that only buy puts on large green candles on trend day. You get a good feel and you are assured some selling thereafter. You'll notice most of the green candles are being eaten up anyway, because yesterday, look at this, we just have all red, especially after 1 p.m. right here. So don't be discouraged by this. If it is your first time trading in a trend day, if you come face to face first time, nobody gets it right the first time. This is a good experience for you, especially if you're trading on a spectacular 15, I think it's an 18-point trend day yesterday. So if there's anything you need to learn from this, is to not fight the trend. Now, we do have the need to want to call for reversals. Don't do that, not on the trend day. Right. Secondly, there are some structures that are more than the others on a trend day, and I talked about that head and shoulder pattern. And one big reason why the head and shoulder works is because of the green candles being eaten up by the red candles. So basically, it's a rejection of a certain level, thereby forming the right and left shoulder. And that will give you the confirmation for entry, right? It's been happening, keeps happening, especially on trend days like that. And the third thing you need to learn is to leave runners. Now, I talked about this early in the day. Now, there will not be too many structures to take trades. So you cannot be taking trades based on structures. As I mentioned yesterday, structure is based on buyer and seller behavior. Now, in a trend day, the behavior is dominantly selling. So it's not easy to find structure. So you have to depend on levels. You have to depend on your experience. And in this case, eating up the green candles, that's experience. But that doesn't mean that there's no structure, because that's just an excuse, isn't it? Right? We still had the head and shoulders pattern appeared 3 times. Now 3 times is more than you need for every quality day. I want to include the start of the day. There's one more at the front. But no, I will not be taking that. It's too early on, especially with a possible dead cat bounce here, right? Some shorts covering right at the start. After a 15-point day, I will stay away from this. Look at the wicks. But after which, plenty of opportunities if you focused, right? And basically buying off every retracement here. Now look, it never ever broke the channel. So if it did not break the channel, not at all, why do you want to buy the reversal? Just buy puts until it breaks the channel and you get stopped. So in a trend day, you must always remember. Now in this case, you have to always remember, just chart your channels and don't fight the trend, right? And I also mentioned to leave runners alive. Now you have to leave your runners alive. And I talked about that in yesterday's daily brief, that if you manage to have 4 contracts, use 2 to protect your trade, 1 take profits, and 1 to leave a break-even runner on a trend day, chances are this break-even runner will last the distance on a trend day, and yesterday it certainly did. So if you took early trades here, let's say you took this trade here, there's a head and shoulder here, at about 401, now you would have gotten that 7 points by the end of the day for that 1 contract, right? So always leave that 1 break-even runner, and that's with experience, right? You don't worry about that runner. You let that be the last thing on your mind. You leave it at break even. You come back at the end of the day and revisit it. So you always must remember this on a trend day like that. Once again, if this is your first time experiencing a trend day, right? It's a good experience. Learn from all of this. And there are plenty of such days ahead. Just look at SPY's dailies, right? We have plenty of such days. You don't have to worry. Plenty of such trend days. They're appearing more often than not. Worrying, but it's good for us day traders, right? Plenty of trend days ahead. Plenty of 2, 3, 4% days, or maybe not 4% days, up 2 to 3% days, plenty of it. So once you learn from it, you can always use it again. The people who profited from yesterday, they did it because they followed strictly to instructions, or they have experienced it before and this experience stuck to them to life. So it's a good day yesterday for some of us, but if it's not, don't be discouraged. Now you will be extremely discouraged if you feel you did not extract the full value of this market. But I like to put it in another way, that as long as you have experienced this, what you got out from the market, regardless whether it's profits or experience, now the market has gifted you something. So we are grateful to the market for gifting us something to learn. Now, if you're always looking at extracting full values like that, then you are missing the point. Because the thing about day trading is not extracting full value from that one day. Because what you need to know about day trading is that you are learning the skill that you can use to do this every single day. So if you're too focused on one day that you have missed, then you are missing out on the big picture, right? We learned from that day, even though it did not work in our favor or we did not extract the full value. But we learn from it so that we can do it every single day. Now that's the main point. So if you missed that big picture, it will always be very discouraging for you as you see this and you think, I missed out on this, I'm not good at this, and you start to doubt yourself and you forget the reason why you do it. Nobody gets it right on the first time, right? There's no talent in day trading, I can tell you that, but there is self-mastery. So you have to master your emotions by, firstly and most importantly, seeing the big picture and focus on the big picture. So much to learn, and I'm learning every single day as well. Now you have to know that I'm learning every day from the market as well, right? Everybody has to. The best traders in the world have to. And once you stop learning from the market, this word comes in, and when this word comes into your trading life, you are finished. I can tell you that. So as long as you keep learning from the market, regardless what it is, every single day I learn from the market. I can have a huge day, and I had probably one of my best days yesterday. But one indicator every day that I tell myself is that if I do not learn anything from the market, then I had a bad day. So yesterday I learned something as well, 100%. If you don't learn anything from the market when you do your review and you do your journaling, then you are doing it wrong. So it's not about profits. It's about what you learn. It's about the big picture of doing this every single day. And likewise, isn't it? If you had a good day just like me, don't you want to repeat this, rinse and repeat this? And that comes with learning. And once we learned how to deal with what's given to us every day, we can make a lot of money in the long run. And that's so much more precious and important than having one good day. So stay focused, keep to the big picture, know why you're doing this. Don't be discouraged. If you are, just take a breather, especially those that are caught in calls. I feel you, but take a breather if you need to. Take a break, a couple of days, a week if you need to. Remind yourself why you're doing this. Very important. And once you understand that, you can go a longer way, because trading, as I told you before, this is for a lifetime, right? And if something can survive you and I, something that will last for generations, something that will survive us and be there for a lifetime, now you need to have the competency, you need to have the focus, and most importantly, you need to have the right reasons in order to run this race together with the market. If not, you will always be the one quitting. The market never quits anyone. It's always the trader quitting the market. And you know why. Because the market is there, whether you like it, day in, day out, every single day for generations. So if you're not in tune with what you need to learn, what you need to do, and why you are doing this, then you will never outlast the market. Always remember that. Right, on to today's daily brief. Now let's take a look at this, right? We talked about the trading range here. We had 401 and 390 here, right? I mentioned if we had extreme fear, we would have entered this zone here, although I was thinking probably 401, 410, and we hovered quite a bit at the early candles at around 401 here. So the market was thinking whether the report was bad enough to bring us down one range, and it was, because core CPI went up even though the gas prices came down. Now, gas prices has been an excuse for the Fed for inflation for the past several months. So once gas prices came down, there was no more hiding from the fact that inflation is actually really bad, because core CPI went up even though gas prices came down. It tells you how bad it is. So the market took some time to digest that information, probably a few hours before bringing us down below 401 into this 401, 390 range. Now the expectations of the market now is 100 basis points for next week's FOMC. Don't forget, we're doing all these because of FOMC next week. The market is pricing in for that eventuality. So 100 basis points, we will probably be staying below 401 until anything changes that fact. Will bring us out of range here. So today I'm looking out for one that should be a hard resistance. So look out for that. We'll probably be trading within this range here up to 390. 390 is not tested yesterday, so that should be the hard support. So very straightforward today. If we knew the ranges here, we would pay attention. Now this doesn't mean that the chart cannot break through these two ranges, but it is for us to pay attention to any micro structures that may appear, especially at the end of the trading ranges. Now, as we zoom in a little bit more, we notice a few more areas I want to pay attention. Now, let's take a look at the 10-minute chart. I'm going to use this as an illustration. Now, remember 401 yellow. Now, this is a very important level. This is the start of the trading range, and you see how we started battling out here, and we had one more at 399 here as well. So remember I mentioned about pink 399. Now we take a look at the chart here, 5 minute. I'm going to copy this into this. So you see pink 399 and yellow 401. We talked about this being the start of the new range, so we had to be very careful, especially in the early candles, and it took head and shoulder structure to break us out of pink, right? If you see this head and shoulder structure that we caught, Now the sellers needed to rally in order to break through a key support area. So this is known as structure, right? Buyers and sellers imbalance. Sellers needed to do something, need to build up their strength, and this is what they did. And it broke us through here. Took another head and shoulder here actually to break through orange as well. So you see how sellers, sometimes they maneuver. Now this was actually a bullish call, but remember, as I told you, nothing bullish about yesterday, right? So they are just shorts covering. So unless you have a good risk reward trade, you should not be taking calls, right? And this happened here, and we saw another seller's move, head and shoulder, to push us down. So the higher the price we have now, the more ambush it will have. So we have to remember that if you're having hopes that we will break through 401 today, let's adjust our expectations. Most probably this will be our trading range for today. Will we break through? Possibly, if we see some buying structure that will build up buying strength to break us through the range. So we'll look out for this. Now let's take a look at some micro ranges. Now in the final 2 hours of yesterday, it was an easy way down. You see all these large candles. So pre-market today, not surprising, right? You see that it is climbing up. And remember what I told you, easy way down. And if it's in pre-market with no opposing volume, it's not indicative. It's easy for pre-market to go up like that. But if the sellers want to come in when market opens and bring this back down, it's so easy. That's why closing the gap is so easy sometimes, right? So you have to be very careful about pre-market action like this. Don't let it allow you to create certain bias, especially after a red day. It doesn't naturally mean that we are going to start recovering tomorrow. Maybe some shorts covering, but don't be expecting something spectacular. Not without good structure anyway. So right now, take a look at this. This is a hugely defended zone. So expect 398 orange to be a very key resistance, as well as 401 here. So we have two key resistance levels today we want to take note of. Now we also want to be paying attention to this yellow 395 today. Right, we have that level here at the 5 minutes yesterday here, 395. Now take a look at this. Right, pre-market, we are already hovering over that area here. So this will be a very important level that we want to be looking at. Now this support resistance, we will see it'll probably fight out here in the early candle. So pay attention to this yellow 395 today. Now, in terms of support, we have 390, which we have not tested yet. That's near the end of the trading range here at orange 390. We have one more at yellow 388. We bounced off this 392 orange here. So we want to pay attention to this yellow and orange 392 here. Now we had some trading, very high trading volume here and some rejection here. So regardless of whether the chart is headed down or not, this will certainly provide some sort of support to either form a bear flag to head down or to form some sort of reversal. So we'll pay attention to the microstructures later on then. Now, remember, the expectations now are 100 basis points. 100 basis points is something that is unprecedented, hasn't happened in our market yet. So is there a possibility we break down 390 and continue heading down? Absolutely. Right, so just be prepared for that, especially if you're looking out for playing calls today. Maybe it happens, but don't have that expectations, especially with the fear in the market now. Now, we may wait till Friday to continue to push ourselves out of this range. Now, Friday is a quadruple witching day. Well, it's typically a red day, so maybe some recovering first before Friday we have that final push, including all the profit taking. So that also could happen, so we just have to pay attention to that. So it's possible that we start chopping within the range as well between this 401 and 390. So we've got to pay attention to that. Will we trade internally within yesterday's range? That is also very possible. So we also want to look out for that. So if that happens in this case, then 392 will be a very important level we want to pay attention to. We want to also pay attention to this 395 yellow, right? This will be a very key level of support or resistance here, very important, as well as 398, a possible resistance here. 399, 401 will probably not break out of this range. So this is the end of the trading range unless there is a very strong bullish action right? So we'll look out for microstructures, but otherwise I think this will be a hard resistance for today, and this will be a secondary resistance, orange 398. Look out for 395, right? This will be a very important level for us to see for down support or resistance here, and obviously 392. Now if we are trading internally within yesterday's candles, then we will probably see some chop, and you have to take decisive profits. So just take decisive profits. Otherwise, there also is a possibility that we continue to head down. So you see we had some flagging, or possibly had some flagging again before we head down. So you notice how there will always be some sort of resistance that will bring us down, right? So look out for these resistance levels, and could be this yellow 395. So looking out for this 395, looking out for this 380, 398, right? I will still be looking to play puts actually, because remember what I tell you, puts are just so much easier to play, especially on a down day like that, because you get instant feedback, right? Look at calls yesterday, right? If you played calls yesterday, you would have to run through this 2 hours of turmoil here. Just not worth it, right? So be focusing on puts sometimes, right? It sometimes give you greater feedback. Look for good structure, get in, and you get instant feedback, right? I explained all that in one of the videos why you want to play puts sometimes, so you can check that out. So trade safe right now. Be careful of having biases, understand the market context so that you set your context in range, so that you can translate the context into the charts and know what are realistic expectations, and you can plan your trades accordingly, right? So thank you very much for watching, and I'll see you later closer to opening bell. Thank you very much.